What's up guys, and welcome to today's video. And I know, where has this gone?
What have I done?
Today we're going to be looking at Legal and General. We're going to see what their juicy dividends looks like. Let's get on with the video. So guys, what is Legal and General? Legal and General is a multinational financial services company. So it specializes in things like financial management, so funds and ISAs. It does pensions, it does insurance and life insurance. And what it does is it uses that capital to invest in assets, which it looks to hopefully mature at a higher rate, so it can pay out those insurance and life insurance and pensions and things like that, as well as gather income from those assets. It's currently the 10th largest financial services organisation in the world, and has 1.2 trillion pounds worth of assets underneath it, which is a huge number. Let's check them out. So guys, let's take a look at their business model. I think when you look at a business, you should actually understand how it makes its moolah, how it makes its money. So if we look here, we can see on the right hand side is really around its insurance, retirement and investment management part of the business. So what this is people are paying Legal and General to provide their money when they retire, so investments into assets that will get a greater return when they retire. And Legal and General siphons off that. And if we look at the right hand side, the capital investments, that is the big projects, the big real estate and assets that Legal and General owns. So Legal and General will invest in real estate. It does future cities, renewable energy. It has technology startups funds. I think it did 600 million of its assets are tied up in technology startups, which is great. And what it does is it uses its insurance, retirement and investment management part of the business to fund that capital investment part of the business, which is where its assets are. And as those appreciate in value, it is getting more capital to pay out on those three other parts of the business while getting income from those assets in general. So that's how it makes its money. And on the right hand side, that's how it gets a return on investment of 20%, which I can get on board with. So guys, just to give you guys a taste of the types of investments that Legal and General does, I've got one here down below and another one also to look at. So this first one is Legal and General requires an urban logistics scheme of £23 million. And what this is it's part of their investment strategy where they are looking to invest capital into growth areas in terms of real estate, and logistics centres, with everybody buying online, is up and coming and definitely becoming more and more important in the days to come. And another one to look at is Legal and General's housing portfolio. So as we can see here, Legal and General's growing build-to-rent portfolio currently has 5,000 homes across 13 schemes in the UK. And what it's doing is setting a carbon net zero policy in by 2030 for all of its housing developments, which is really good to see. As we know, residential homes are notoriously expensive, especially if you live in London, and they seem to be going up in value. So I think this is a relatively smart investment. Additionally, Legal and General has put in place a net carbon zero target by 2030 for all of its future developments. This is really important because, as countries, as organisations start to take essentially the human impact on the world more seriously, we are starting to move towards a more conscious race as human beings. And this is really, really important, and it's good to see that Legal and General are taking this seriously and putting this philosophy into their investments. And this is something that I think shareholders and the general public can get behind, which increases, Legal and General's goodwill as an organisation. And we will start to see this across multiple companies in the future coming up. So guys, let's talk about the exciting part of Legal and General, its dividends. And I think in my portfolio, I do want to get more dividend stocks. I know some people think they're boring, but slow and steady wins the race. So if we look here, their dividends has grown year on year, and it's only going up. So if we look at 2011, starting at 6 pence 40, 6 pence 40. So I don't know what that even means, but it's currently sitting at 17.5, which is great. And I mean, I think it was forecasted before the current situation came in that 2020 it was going to be at 89, which would have been absolutely amazing. So as we can see, Legal & General has a really strong commitment to its dividends. And just before the current situation came in, and a lot of companies halted their dividends. I mean, it was one of the big upsets was dividends were getting cut while the current period was a bit rough in the seas. But as we look here, Legal & General was a standout mover in the London markets on Monday after defying a Bank of England's request to pay its dividends. So it as a company has a real strong commitment to its shareholders to pay dividends, and I think that's something to take into account. But also one thing to consider is dividends can be a massive burden on a company. Imagine if you were a sole trader and you had to fork out, let's say, 50% of your profit every year to pay for dividends, and let's say you wanted to increase dividends, that's just more of your profit being eroded away. So what you want to make sure is that you're not geared up to paying, let's say, 90% of your profit goes to dividends, because that only leaves you 10% to reinvest into your company. So if we look at what this says about Legal & General, I think this is really interesting. The main attraction of Legal & General is its dividends. It currently yields around 8%, and this has been consistent growth over the past 10 years. And I think something really to note here is, firstly, it has dividend cover of around 1.8%. So that means that its profit is 1.8 times the amount of dividends that it needs to pay out. And what this is, it gives it a cover, so it's only really paying half of its profits in dividends, so that allows it 50% to reinvest to the business, and it also shows sign that it could inch up in growth. So as profits creep up, it still has room to grow its dividends in the coming years, which I think would be very exciting. However, guys, one thing to note about Legal & General is the dividends are currently on hold. So they did pay that final dividends despite the regulatory suggestion, but they have now paused it, but they are looking to reinstate it very soon. I just thought you guys should know about this. And during times like this, understanding a company's solvency position is always really important because in the next coming years, things are going to be unpredictable, and therefore understanding where the companies you invest in are in a financial position is really, really important. And if we look here, the income stock also has a robust capital position with a solvency surplus of 6.9 billion, a coverage ratio of 174%, which means there should be no insolvency risk. And I think this is really important, where if you're looking in for a dividends company, you're looking for that kind of just safe nest to put some money and the continual reinvestment of potentially dividends, or just dividends taking out every year, but you want it to be a safe bet and quite kind of robust in the long term. So guys, let's look at their share price. As we can see, kind of over the long term, it's had a really sideways consistent kind of approach to growth. It's been hovering just over that £2.50 mark per share, and I think it has seen growth over the years, but it's been very, very slight. However, with dividends, and you're not very concerned about massive growth of the share price, because you are reinvesting into shares and they have the compounding effect. So when you have 10 shares, that becomes 11 shares, then you go up by a multiple of, let's say, 2, so you eventually have 13 shares, and it trickles like that. And if we look at the kind of 6-month spread since what happened, so they were at highs of over £3 a share, which is really good. They dropped down when it all happened in just before April, down 56%, which would have been absolutely ideal to get in at £1.76, but now they're on the upside, so they are up 40% from that, but still down 24% from their highs. So guys, what are my final thoughts on Legal and General? So I think they're a really good stock, especially for their dividends. I don't think they are particularly exciting. And this article really puts it best. It says, in the FTSE 100, boring is rewarding. And I think, you know, in your portfolio, it's really great to have some growth stocks, to have some stocks which, you know, have a lot of cast in the sky aspect. So, you know, get that hype behind them. And, you know, could be the next Tesla. So it could go from, you know, $10 a share all the way up to, you know, $1,000. It's great to have some of those. But sometimes in your portfolio, you do need that safe bet, which is that consistent, slow approach to reinvesting the dividends and having a mixed and balanced. So guys, what do you think of Legal and General? Do you think they're a dividends gem? Let me know in the comments down below. If you enjoyed this video, smash the like button, and I'll catch you next time. Bye.